Hi friends, my name is Rahul Jain. I'm a SEBI registered research analyst. I want to start this video by looking at this particular stock chart. What do you see here? You see that in the last 1 year, this company's price has gone up by almost 85%. I mean, in such a short period of time, the stock has gone up by 85%. Now, if I ask you what could have caused this price to go up by such a huge percentage in a shorter period of time, you will say that, Rahul, maybe the company's earnings growth is very, very high, or maybe the valuations were really attractive when the stock started to move up. There could be n number of reasons. Now, what I want to do is I want you to have a look at this particular chart here. Okay, what do you see here? That foreign institutional investors started to buy this company's shares since March 2025. Okay, 4.22% was the holding at the time, and it went up to 6.73. Okay, so it means when FIIs or DIIs start to buy a particular company, they buy in bulk, and that is what causes generally the prices to go up hugely. Okay, now one very important observation you will note here is that between March, June, September, if you see, there was only a tiny interest by FIIs, okay, because the holdings were going up from 4.22% to 4.58%, 4.65%. Okay, until this time there was not a major move in the stock prices, as you can see here. Okay, but the moment FIIs started to increase their holdings from 4.65 to 4.95 and then 6.19, 6.73, the stock started to give massive rallies, as you can see here on my screen. Point is very simple, that if we are able to find such stocks at an early stage, when FIIs have just started to buy these particular companies, or DIIs have just started to buy these companies, instead of waiting and reaching here when they have already done the buying. Most retail peoples will try to get the names of these companies when the FIIs have already built their positions. Our intention is not this. Our intention is try to pinpoint those companies where FIIs and DIIs both have shown some interest, tiny interest, not huge interest. Okay, how to find such companies? I'm going to actually show you live by building a screener in front of you. There might be 15 to 20 companies that may qualify as of now, but please remember the stock names that you will see is not important here, because this data will change almost on a daily basis. I don't know when you're watching this video, so please make sure that you are building this screener along with me. I've given you the link of TickerTape in the description and pinned comment. If you want to follow along, use that link and you can follow along and see if you can build this screener yourself. Please focus on the learning, not the stock names. Of course, you will see the stock names. None of these stocks are recommendation from my perspective. I really want you to learn this very important concept. With that, if you're new to my channel, I request you to hit the like button. Let me know in the comments a simple thank you, and subscribe to this channel. Your subscription hugely motivates me and my team to continue to bring good content for you. With that, let's get this video cracking. So I'm heading to TickerTape. First thing we will do is click on screener here and try and look for Indian stocks here and say start screening. Okay. Now you will see a lot of stocks coming up here. First thing is to get rid of all of these fields here. Okay. Close price, remove it, P ratio, 1 month return. We are not interested in any of that data. So let's get rid of everything here. Now the market cap. Generally, I look at stocks that have market cap of more than 10,000 crores, 15,000 crore, depending on what I'm doing on screener. But in this particular video, I'm not going to exclude any companies because of market cap. And the reason is very simple. Even if a company that has 5,000 crores of market cap, and if FIIs and DIIs are both buying that particular company, what does it mean? It means there is something unique about that company, that FIIs and DIIs are also buying that particular company. And we need to find out what is that unique thing about that company. Therefore, I do not want to exclude it. I'm not saying that we need to go for companies that are at a very low end of market cap. No, I'm not saying that. All I'm saying is that we don't need to have this as an exclusion criteria. So I'll leave it as it is. The first filter that we are going to use simply is we are going to say FI change, holding change 3 months. So give me those companies where FIs have increase their holding in the last 3 months. Okay, so I'm going to add that particular filter here. Now, very important parameter here is what should be this range. So as I told you with that particular example in the beginning, that we want to know those companies where there is some interest by FIs, but they haven't already done the huge buying. Okay, so the minimum I'm going to keep here is 0.50%. Okay, I don't want to have those companies where FIs have only increased their holding by 0.10%. I want to have something there which is around 0.50%, and the max need to be around 3%. Okay, now of course you can play around with this particular data. This is my filter criteria. Okay, you're free to play around with this particular filter criteria. Now we get around 253 companies where in the last 3 months, FIs have increased their holding by around 0.50 to 3%. Okay. Second criteria here will be how much is the total foreign holding here. Okay, for this what I'm going to add is foreign institutional holding, another parameter here. And what I want to do is I don't want to have those companies where the foreign holding is very, very high. Okay, because that would mean that the scope for foreign holdings to go up is less. What we want to do is we want to pick those stocks where the foreign holding right now is less so that there is more scope for them to come and buy later on, and that is where the stock prices are likely to go up. Okay, so for this I'm only going to look at those companies where foreign holding is from 1 to let's say 15%. Okay, again you can play around with this data. This is my criteria. Okay, so this gives us around 198 companies. You can see the name of these companies here. This talks about FIs starting to build some position in these companies. The second thing that we will do is we will also do exactly the same thing for DIs. So I'm going to say DI holdings change last 3 months. Okay, and I'm going to say give me those ones where the change is around 0.50% to almost 3%. Okay, now it is only giving me 21 such companies, right? So these 21 companies, FIs and DIs both have bought it. Okay, so there is something unique about these companies. We don't know yet what that will be, but as of now we can see that there are around 21 companies. Again, I'll also put the same criteria that the domestic institutional holding should not be more than 15%. So I'll say 1 to 15%. Okay. All right, so I'm going to say 1 to 15%. That gives me 17 companies as of now. I don't know when you're watching this video. Depending on when you're watching this video, when you're running your screener, the stock list may completely change. Now, the next set of criteria that I want to use personally is valuations and the price movement. Let me actually quickly walk you through. So the next filter that I'm going to use is from a valuation perspective is PE ratio and P premium versus subsector. Okay, meaning whether these companies are trading at a premium from a PE perspective or not, whether it is a discount or premium. This is what we want to know. So I've added that particular filter here. I'm not going to filter out because of this. Okay, another one that I want to use is PB, which is price to book ratio, which is PB premium versus subsector. And you will note that these two parameters are pro parameters. And if you do not yet have TickerTape Pro subscription, you are going to get it at 45% discount right now on annual plans if you use my link. I've given you the link in the description and in the pinned comment. I've created so many videos on TickerTape screener, and there are so many ways to use this particular tool. You got to have the pro subscription if you really want to utilize the full strength of this particular platform. Okay, so I'm going to add this one here. Okay, so these are from a valuation perspective. We are not going to exclude any companies because if a FI is buying a particular stock, it's fine if it is overvalued slightly. Okay, you can't exclude that. There might be a reason that the company may remain overvalued for certain period of time because there might be some tailwinds, right? So let's not exclude because of these two parameters, but we need to have them. We're going to filter this list based on these two parameters. The last two parameters I want to use is price movement. Okay, this is also very, very important. You don't want to pick a company where the stock has already gone up and it is trading at 52-week high price. Ideally, you would want a company that is trading not at a very, very high price as well. Okay, so for that, what I'm going to do is come back here and say away. Okay, percentage away from 52-week high, meaning how far the company's stock price is right now from last 52 weeks high. Okay, and likewise the low. So I'm going to add these two filters here. Okay, now we need to start working through this list and try to find out what are the top reasons that FIs and DIs are buying these particular companies. Okay, so let me walk you through a couple of examples so that you get a complete clarity of how do we go and review these companies. By the way, you can see the name of these 17 stocks on my screen. Okay, I'm going to go down here. None of these are recommendations. The only reason I'm showing you these companies is so that you understand what type of companies are coming right now. Okay, again, not recommendations here. This list will completely change when you are watching this video, when you are running this screener. Okay, now the first thing we will do here is that we will look at this P premium versus subsector and we'll try and sort it from lowest to highest, meaning that we want those companies that are trading at a discount from a P perspective, from a valuation perspective. Okay, so you can see the name of the companies coming up here, right? Now, one thing we need to look at here is the price movement always, right? So for example, JSW Cement Limited, as an example here, I'm teaching you, okay, this is trading at a massive discount as of now from a PE perspective, but from a PB perspective, it is trading at a premium. But more importantly, if you look at how far this company's stock price is right now from 52-week high, then it is around 21%. Meaning that it is not at all-time high. And from 52-week low perspective, how far it is from that 52-week low, it is around 24%, right? So what we need to do is we need to look at this company in isolation. So what I've done is I've opened this particular company here in my separate tab, okay? And the first thing we will look at is the holdings here, okay? So if you go down here, look at the holdings here, what do you note? You note that in the month of December and March, the holdings actually dropped FI started to sell this particular company, but all of a sudden in the June quarter, FI started to buy this company again. What could have caused this particular move? Now for this, if you go to the sentiment analysis, what you would note is something very, very fascinating about this particular company. Okay, so if I go and look at the growth drivers here, let's open the first one. What do you note here? That this company is expanding. Okay, they're taking entry into the northern market. For example, they have commissioned integrated Nagpur plant in the March 2026. And more importantly, management is saying that we would continue to expand. And by FY30, the management is saying is that we would reach around 43 to 43.5 MT of the capacity. This is a huge expansion that is likely to happen in the next 4 to 5 years. And also, if you look at how the operational performance of the company has been, if you note, the market share has gone up here. Okay, market share has gone up. The industry has grown at around 8%. The company has grown at around 12% YOY basis. And if you look at the numbers also financially, this is all making sense from a growth perspective. You can read this commentary. More importantly, if you go to the financials of this company, what you would note here is that company made losses in June 2025 quarter, but after that, the profit has been going up consistently at a very, very huge rate. Maybe this is the reason that FIs have started to buy this company again. Of course, you can also look at the valuations, right? So if you go to the peers, you will see the valuations. Now, this is showing in negative. Why? Because FY26, the company made losses. That's why you see it in negative. But overall, could this be the turnaround story? Because of the expansion that is likely to be there. Something that we have learned about this company here. Again, I'm not saying that go and build position in this particular company. Maybe this is a cement sector company. You don't want to build positions in a cement sector company. That is entirely up to you, up to your portfolio. But this is how you go about looking at these companies. Now, if you move to the next company here, Satin Creditware Networks Limited, what you note here is that it is around 14.32% from all-time high. Okay, last 52 weeks. Therefore, I would ignore this one. I would go to the next one. Jammu and Kashmir Bank Limited, still 29.33% away from the last 52-week high. What we can do is analyze this one here. So if I open this company in a new tab and go to the holdings page, what do you see here? In contrast to the first company that we saw, JSW Cement Limited, here if you see, the foreign holdings have been continuously going up. Okay, what could be the reason? So for that, if you go to financials, let's have a look at the numbers here first of all. So if you look at the EPS growth rate, very, very good EPS growth rate in the last 3 years that we have seen. But more importantly, if you go and look at the latest results or the presentations, the PDFs that you see here, okay, I've opened one of them here and I was going through this. What I found is something mind-boggling. Okay, this bank is a turnaround story. Look at how the net profit has gone up in the last 4 to 5 years at around 40% CAGR basis. Right? Very few banks would have delivered this kind of growth in the net profit. If you look at their overall business, what you would note is that advances are lower, deposits are higher. Okay, every private bank right now is struggling with lower deposits and higher advances, CD ratio as we call it. But this particular bank has higher deposits, 57%, and the loan is only 43%, meaning that they have more deposits to be loaned out. Therefore, there could be potential growth coming up from a loans perspective. If you look at the profitability ratios here, you would note that return on assets, the blue line that you see, has gone substantially very, very high. Return on equity, the red line that you see, very, very good improvement in the profitability numbers as well in the last 3 to 4 years. If you look at the asset quality, it used to be at around 10.97% from gross NPS perspective. It's come down massively to 2.50% only. Net NPS from 3.48% to only 0.64%. So great turnaround in all the parameters. If you look at asset quality, PCR, cost to income ratio, whatever you look at, this company has done pretty well. Okay. More importantly, if you look at the company's branches, they have around 878 branches in J&K, Jammu and Kashmir, and around 139 outside Jammu and Kashmir. So it is heavily concentrated in Jammu and Kashmir. But what if this company grows outside Jammu and Kashmir? That is where the growth is likely to be. And if you look at the growth drivers mentioned in TickerTape, you would note that the company is saying that 28% loan growth has come in from outside Jammu and Kashmir versus 9.5% in Jammu and Kashmir, meaning that the entire country is out there to penetrate for this particular bank. And that is where potentially the growth might come. And maybe these are the reasons that FIs are buying this company continuously. Again, I'm not saying you go and buy this company because there are risks here. For example, if you look at the latest quarterly results, their profit has tanked. Okay, there could be volatile quarters here and there. Stock might go down. Okay, but overall, if you see, the growth prospects of this company looks to be positive as of now. Now, these two examples that I gave you, I've only scratched the surface here. I haven't really gone down to a lot of details like free cash flow, fundamentals and many other things. So you have to do the full analysis. But hopefully, by looking at these 17 companies, you can go and do some analysis, find out what is good for your portfolio, find out what is not good for your portfolio, and start including those those stocks that make sense for your particular portfolio. I've given you the link of TickerTape Pro. If you use my code and my link, you're going to get 45% off on the annual subscription. Hope you learned something new in this particular video. If you did, let me know in the comments a simple thank you. Like this video. I'm going to see you in my next video. Until then, keep rocking.